and welcome to 60 Minutes with Scottish Self-Build and Renovation. My name is Gavin Esselmont, and I'm delighted to be welcomed this week by our guest to talk about the Scottish Government Self-Build Loan Fund. So thank you very much for joining us tonight. And just before we get started, I just want to check that you can hear us and see us okay. So if you wouldn't mind just kind of popping into the comments field where you're coming from, just let us know where you're tuning in from, and it just lets us know that you can hear us and see us okay. If you have any questions on this programme, on the loan fund itself, or maybe even your project and any kind of general financing questions, just pop them again into the comment stream and we will address your queries as best we can. And finally, this programme is being recorded. It is going live across our social media channels. So we will also have this available, recorded at the end on our YouTube and Facebook channels. So this week, we are exploring the Scottish Government Self-Build Loan Fund, and I'm delighted to introduce to you Neil Walker of the Highlands Small Communities Housing Trust. Good evening, Neil.
Good evening, Gavin. Yes, thanks very much for allowing us this opportunity to discuss and promote the Self-Build Loan Fund. I just hope everyone who's logged in will take some positives away from this. And as you say, it'd be great to have some questions that we can answer and help folk along the way with their preparation. And if they need to come to the Self-Build Loan Fund, it would be excellent to speak to them.
Yeah, I mean, it's an interactive session. We try and get these to be very engaging because everyone's different. Everyone's got a project of their own. Everyone's got different circumstances, and financing is such an important topic to get right. And if you don't get it right very early on, then you could end up in problems. I'm sure you've probably seen one or two of those in your career. I mean, tell us a little bit about how you ended up doing what you're doing, Neil.
I suppose my career started out in the banking sector back in the mid-80s when I joined the original Bank of Scotland. And from there, I joined private practice, a law firm as an insurance manager and mortgage advisor. I worked for Building Society, which specialised very much in the self-build product. Being an area manager there, had an underwriting mandate. So yeah, absolutely enjoyed the self-build market. Like to get involved with it, talked to so many clients with different projects, got involved with valuers, QSs, the builders, often sat in caravans on building sites, just talking to some of my clients who are at the very early stages. So yeah, it's always exciting to be out and amongst it. And I suppose my job had a lot of travelling. You could be away from home for 10, 12 hours at a time. So long days, and I decided to change of direction. And when the opportunity came up with the Highlands Small Communities Housing Trust, I was delighted to go for it and basically offer what I had and my experience. And yeah, just delighted to be able to help people out there fund their projects who otherwise wouldn't be able to do so. So yeah.
How long have you been at the trust for?
I've been just over a year, Gavin. I joined in July last year. I picked up the fund, and yeah, it's actually grown fairly rapidly this year. Quite encouraged that during lockdown there was a reasonable level of activity. Potentially, folk had more time at home to do a lot of the desktop work as well. They're able to get some of their project quotes and such like underway and do a wee bit more planning. And yeah, we saw an upturn in applications, and yeah, we even managed to issue loan offers during lockdown to get folk kick-started. So that was very, very encouraging. And even working remotely, we've still managed to carry on with releasing funds to those. Obviously, there was a wee spell in the middle where we weren't able to release funds when the building sector was shut down effectively. But yeah, activity's been very, very good, and a good level of pipeline just now as well with applications at different stages. So yeah, all's good just now.
Is that also reflective of the interest in doing self-build projects? I mean, I'm hearing you saying that, and it's actually quite encouraging to hear that there's a lot of applications, and dare I say, it might also be an indication as to how many people are thinking about doing self-builds over the traditional way of being able to just buy a house and then upsell or downsize as life moves on.
Absolutely right. I mean, we can monitor, the number of downloads we have as well, or from the website for those that download the brochure, and they're coming from all over Scotland. From the Northern Isles, Western Isles, mainland, all quarters. So whilst there's a very, very strong pipeline of business, there are so many more who have downloaded the brochure, and I've had so many more conversations with people who maybe aren't quite ready at application stage. Obviously, this scheme acts as, lender of last resort. There was a need identified following, the mortgage sort of crisis back in 2007, 2008, where lending became a wee bit tighter, and in particular, the self-build market, was affected badly by that. So obviously, there was a need identified to sort of plug that gap for those that were unable to access mainstream lending. Now, no fault with individuals. It's just that there's a restricted panel of self-build lenders out there. They've all got their criteria to work to, which is, absolutely fine. Doesn't make a build a bad project or prospect. It's just that the criteria wasn't quite there for them. So the Scottish Government decided to launch this pilot scheme, which was called the Highland Self-Build Loan Fund, and we tendered for it and were successful and acted as agent for that. And following on from the success of that, the scheme was rolled out nationwide, and that's where we are today. It's now the Self-Build Loan Fund, and it's available throughout the whole country in rural and urban areas. As I say, because it acts as lender of last resort, the individuals who apply, one of the main criteria is that they've been, declined or refused mainstream lending. And as I say, it could be for various reasons, but ultimately they can still build a house and secure funding at, the other end. And that's all we need to know, that whilst they've been declined, as long as they've got a repayment strategy at the end, they will qualify for the fund. We have our criteria as well, but we'll talk about that as this evening goes on.
So you brought us nicely round to the loan fund. So well done, thanks, Neil. So just tell us a little bit more about the loan fund itself. It's obviously launched. It's an initiative launched by the Scottish Government.
Absolutely. Basically, a lot of these folk who have tuned in this evening might be in that position where they've gone to the high street lenders that are in the self-build market. They've maybe gone to a mortgage broker to do the legwork for them, but they've been declined, for reasons that mean they fall out with criteria. So the loan fund then acts as lender of last resort. So as long as we know that they've been declined and we get reasons for that, that's perfect. That ticks the first box. The second main box to tick here is that they have a repayment strategy. Now, that could be that whilst they've been declined for self-build funding because of the restricted panel of lenders and their criteria, they may still manage to be provided with a mortgage promise for mainstream lending, on a completed project. So that becomes a repayment strategy, which would allow them to access what is a bridging fund for the construction period of the build. They also need to own the land with planning permission to build a house on it. And the other essential criteria is that the house that they're going to build will ultimately be their main residence and the only house they own. It doesn't mean they can't stay in the house they're in just now, because they can, and use proceeds from the sale at the end to repay that, or combine it with part equity and part mortgage. There is a very flexible approach to that side of it. So basically it is acting as a bridging fund for those that have been declined but can ultimately repay it at the end of the build period.
And so how does it operate? You're in that place where you've been declined. Is that the time that you start to look at this, or do you bring it forward a little bit? Do you consider this at the same time you would do the traditional way of getting a self-build mortgage? Sounds like it's last resort, you said there.
In fact, that's what it is, Gavin. So once folk have been declined, they shouldn't give up hope. Contact the Highland Small Communities Housing Trust. We administer this scheme. We act as agent for the Scottish Government. So we'll talk people through the process. It's always good to maybe get an initial email potentially, through the portal. We'll download the brochure, ping in a wee email, give a wee outline of, your project and, the hurdles that you haven't been able to overcome yet. And hopefully we can, bridge that gap, with the fund. I'm always happy to have a chat on the phone. It's always the best way, just to get a two-way dialogue, a bit like tonight. Folk can ask questions this evening. And then we can talk them through the process. As I say, I've already touched on these sort of 5 key areas that would qualify for the fund. So we would take any applicant through a 2-stage process. First part is we look at what we class as the financial side to make sure there is a prospect of being able to borrow and repay at the other end. Once that is successful, we then go to our stage 2, which deals very much with the construction side. So that's when we look at the actual build side of it and the supervision and valuation, and ultimately what the borrowing will be against the value at the end of it. Stage payments are released by ourselves following completion of all the legal work, which will be confirmed by the Scottish Government solicitor. We can actually release funds as early as on the land value, and that can often be a blocker for some lenders. And some of those are looking to borrow, they can't access funds soon enough. So that's always a positive too. We can look at the cash flow and work with the client, and based on their build program. And ultimately, stage payments are released throughout the build as it progresses, with certification from a professional consultant, be it an architect or an open market type product or an NHBC guarantee. And that's as simple as the scheme operates. It's very similar to a mortgage, but it's obviously a bridging fund, short term, just to allow folk to get through the build process.
So essentially, the application process. I guess a lot of people accessing the bridge, the loan fund, will probably have gone through all the paperwork requirements for let's say a traditional mortgage. So there shouldn't really be any surprises by the time you come to speak to you to say, okay, well, we're looking for this, and you're going to come and ask for bits of paper. You're going to be asking for this, that, and the other, which probably is already available.
Well, that's right, because the stage 1 that deals more with the financial aspect. So we're looking at sort of the know your client type scenario, where you're looking for their proof of ID and residency. So, your passport, driving license, and some proof of address. You've already provided that to the banks and building societies. Proof of income, payslips, P60s, self-employed accounts, bank statements, shows lifestyle. We'll be looking for proof of ownership of the plot. So normally the land certificate. And obviously credit reports, just to show credit worthiness as well. And essentially, as part of the criteria, because the fund does act as lender of last resort, we will look for letters of decline, be it from the lenders, or it could be the mortgage broker who's maybe done the legwork and confirms back to the client that they've approached these various lenders and they've been declined for these reasons. So that's maybe just a wee bit of extra. But then by going through the process with a lender or a mortgage broker, you're naturally going to get that paperwork anyway to say, we can't lend because of.
Yeah.
So that's the financial side. So, assuming that we've passed that, we progressed to stage 2, well, that deals with the build progress, So at that point, we're looking for the detailed quotes, which again, they've already had, because they're not going to apply for funding until they know exactly what the funding requirement is. Mm-hmm. Valuation, that's just a standard document. A valuer is going to provide the client with a valuation of the plot with planning permission as it stands now, and a projected end value too, for lending against. Supervision of the project. So obviously, the bills will be supervised by either an NHBC builder, who's obviously got the accreditations for that, or it could be architect supervised, or an open market product which is available. We do a self-build zone, and that's which gives that warranty at the end of it, which allows funding to be raised against that property. We also ask, or in fact, we provide templates for the likes of the build schedule, so that it's easier to use a single contractor, because the contractor will say, here's your quote to build the house through to handover. These are the key stages of the build. Here's the time frame. And this is when we want the payments. If you're going down the all trades route, you'll have individual, estimates from your various trades. But again, we provide a template where they can actually fill that in, so they don't miss any of the trades out. And we have the cash flow projection as well. So it just shows, in conjunction with the schedule of works, when the funding's required, and we can actually just work that through with them to make sure that there will be, sufficient funding available and, equity to lend against. So,
I remember when we were talking to Malcolm a few weeks ago now about the traditional mortgage applications for a self-build, and one of the questions that came in is there a disadvantage to having multiple contractors and you managing them, or is there an advantage to having a main contractor from a financing perspective? And I think the question was that it's always desired to have a main contractor in control of the project. Is that similar? And I might be wrong there, so don't quote me on that. But is that a similar sort of approach to how you guys would look at it as well?
We'll look at it from all angles, to be fair, Gavin. There's no right and wrong for that. Certainly using the main contractor effectively de-risks it, because you'll tend to find you'll get a fixed quote, a very defined schedule of works. Obviously, COVID pandemic blew that out of the water for many people. Going down the multi-trades route, it can be a bit more difficult to manage. But then again, you can do that in conjunction with the architect, because often you can actually ask the architect to project manage. He may charge an additional fee, but the architect can become involved. And if necessary, I've seen architects and QSs, tender a build. And there could be a cost saving there to be had. But it's trying to dovetail the trades, to come on site at the right time. And if there's any slippage of one trade, it could knock your sequence out of order. But no, it's there's no right and wrong with that. It's whatever fits the individual. I mean, we also allow individuals to put their own, what we'd class as sweat equity. So you might have, someone who is a joiner to trade, embarking on his own self-build. Now he might decide to save, cost by doing the joinery work himself. Well, our application actually allows for that. So he can tell us the work he plans to do himself, how many hours he reckons it'll take, and put a projected cost saving. So almost sort of backs up the lower build cost by adding back in his input. So yeah, we can accommodate all these. I suppose the essential part to mention here is that if you're going to go down the all trades route, it's possibly more important to have maybe a bigger contingency fund available, just in case there are any overspends and overruns, or for something that's maybe been missed between some of the trades, where one's maybe assume that someone else is doing it and others assume the reverse. But no, all options available through the fund.
Mm. And sorry, before we go further, Hamish beat me to it. I called him Malcolm. I knew I'd called Malcolm, and I said I'm going to say it's Hamish, and he's just come back up straight away and said, "You called me Hamish." Or you called me Malcolm even, Hamish. Apologies, Hamish. But yeah, no, it's interesting, because ultimately it is one of these things that that can catch you out, and it's something that you can hugely influence at an early stage. So you've got all the paperwork, you've gone through all the kind of initial checks. I mean, what happens next? Does all that paperwork go to the Scottish Government, or does it go to their advisors, or do you assess it?
No, we act as agent, and we have the contract with them, so we actually assess it locally. So as the self-build loan fund officer, I personally assess all the applications when they come in. They are then passed to management for a second signature and approval. So no, we are self-sufficient, and I mean ultimately when it gets down the line to issuing loan offers, it's our own chief executive that actually signs these out. But there are multiple signatures on that, and we have the criteria that we have to work to on behalf of the government. So no, we are self-sufficient locally. Even when it comes to releasing the funds, that the clients deal direct with us as well. Again, that's pro forma that we attach to the loan offers. They complete and send back into us, at the office in Inverness. So they've got direct contact with us at all times throughout the process, from the initial inquiry right through to completion. And as I tell everybody, there's no daft questions to be had. We're accessible at all times, be it by email, phone calls, or through social media. So no, we do have control of our files ourselves.
In terms of the funds that you can apply for, can you apply for 100% of the construction costs and the professional fees? I mean, what can you actually apply for?
You can apply for the 100% off the construction cost. There's no issues with that at all, because part of the criteria is that you must own the land already. So you've already got the land value, which is your input. So whether you've actually bought that or been gifted it, that land still has value and that is yours. So that effectively becomes your deposit. And if you have no further deposit, that's fine. We can lend 100% for construction costs. The issue then becomes with the cash flow, depends on the value of the land in different parts of the country. You could have a plot that's in a very remote rural area, which could have a value of £20,000, and if there's no further cash deposit, the cash flow could be hampered severely by that, by not being able to release enough to get foundations in and potentially a kit on site. But the answer is yes, we can, but obviously the cash flow is going to be key to allow the build to progress.
And professional fees, I mean, can you apply for that as well?
Well, the fees is something you've possibly already had to pay up front anyway. So
right.
that's cash you're going to have, because your professional fees are going to be for the likes of your solicitor, when it comes to buying the land. So you've already paid for that. By the time you actually apply to the fund, you've already had to pay a valuer to get the valuation report. And again, like an architect who's going to carry out your supervision and has maybe designed the house, you've already had to pay for that as well. So,
okay.
So
that's fun. Engineer and quantity surveyor and all these other costs, is that all?
Well, that's right, because that's costs that you've effectively already forked out before you have you've come to apply to the fund.
Okay. And I guess that would have to be funded in any case, and that's. Yeah, you'd be refunding or essentially you'd be remortgaging at the end of the process anyway. So I guess it would all get wrapped up. I guess that could be quite a big cost as well. I mean, what are you talking about for architects' fees and QS and structural engineers? Is that about 10% of the construction costs, or maybe a bit less than that?
Well, they're all different, I suppose. It's an interesting one. I mean, you can be talking, 3,000, up to £10,000. For these professional fees. It depends the level of engagement you have with them, and how involved they've been with the planning process, because some architects will actually take you through the whole process. So that, you might find your architect will offer to be a one-stop shop for you, and submit your planning application, your building warrant, if that's the route you're going down, and provide the supervision and the warranties at the end of it on the back of their professional indemnity, which ultimately makes the property mortgageable at the end.
We talked to Duncan Robson. I wonder if you should call him, maybe you should call him Robson Duncan. But certainly not very good with names tonight, that's for sure. But no, we talked to Duncan in one of the very early programs, and he kind of ran through the breakdown of the kind of professional fees. So anyone that's watching this and may want to find out a bit more about how all that's broken down and what, I think it's the very first webinar that we did. There's some good information there from Duncan of DWR Architecture out in Aboyne. So what professional services would I need in order to apply for the self-build? I mean, we've talked about professional fees relating to the actual construction element. Do I need to do anything else? Do I need to get any kind of validation of, we talked about credit checks and all that sort of good stuff. Is there anything else that we need to get validated to support the application?
Well, I mean, the other professionals that will be involved, as we mentioned, is like your solicitor, because ultimately the solicitor will be involved to buy your plot. But once we get to issuing a loan offer, the client solicitor will also liaise directly with the Scottish Government solicitor to create the standard security, against the land to provide the lending on. You've obviously got the surveyor, because the surveyors will provide you with your plot value and an end value, so that, for any lending, I suppose in the UK, you need to know what you're lending against in terms of value. We've talked about the architect already. I suppose you look at the other end of the process when it comes to repaying the loan. You might be raising a mortgage to repay it, so remortgaging the completed property. So whether you're going through a mortgage broker or an advisor with a bank or building society, you just need to remember you will have fees to pay at that end as well to arrange that. The other option, of course, is for those that have decided to remain in their current property and selling that at the end to make repayment of the loan. They're going to have selling fees too, so they're going to again have a solicitor acting to sell the house, an estate agent, a valuer, obviously for the home report. So it's these things that need to be borne in mind as well, that whilst there's fees at the outset, you're going to have fees at the other end too when it comes to repaying the loan by whichever method you just decide to use.
Mm-hmm. Is there any exclusions about what sorts of developments can be mortgaged? I mean, anything to do with the property itself or the land, or maybe it's a brownfield site? I mean, is there any restrictions at all of what you can apply for?
No, I mean, ultimately, as I say, it's got to be, the build has to be for your main residence and the only house that you own. In terms of the construction type, all construction types will be considered as long as the property is mortgageable. Now, whether the client needs a mortgage or not, I mean, it could be someone who's got sufficient equity in their current house. When they sell it, they'll repay it. But the scheme is there looking to fund housing that is mortgageable, so that it's there for future purchasers to buy with the benefit of a mortgage. Because if a property is not mortgageable, it can only be sold to a cash buyer. And that's back to where the monitoring and supervision comes in from either your NHBC certification or your architect, or let's say your self-build zone. So yeah, the property needs to be mortgageable, and you'll find that is part of the valuation report, where the valuer, as well as providing details of the accommodation being provided and the plot value and an end value, they will also confirm that the property is deemed to be suitable for mortgage purposes. So that's a key element of the valuation report.
And is there any differences between the criteria of a traditional mortgage provider and the loan fund when it comes to mortgageable criteria?
Some lenders might shy away from something that they're not comfortable with. I mean, builds can be deemed mortgageable that are effectively 100% timber. They could have, larch or cedar cladding. They may have some, wooden shingle tile roofs or profile box metal or similar. But some lenders may or may not take that. The valuer can express his opinion. It will be down to the individual lenders, but in general, they will follow the valuer's guidelines, and if he deems them suitable. And if the valuer doesn't think so, he might put a wee rider, within the report to say that it might not be suitable for all lenders. And that's why, again, it's all part of getting your preparation planning done at the outset to make sure that what you build is mortgageable and you can raise the funds at the end for it, where you may have to quite literally go back to the drawing board. But no, we see nowadays that most of these modern, construction types are acceptable by the lenders. And they obviously go through planning and the valuers are comfortable with them. And there appears to be a very willing panel of lenders to take them on.
And anyone watching or listening to this, it would be interesting to understand if you've already used the loan fund or you're going through the process, or you've been accepted and you're now kind of reaping the benefits of that. It'd be interesting to understand if there's any comments coming in that we can address, because it is good to get feedback on these things. It's a worrying time when you're trying to work out how you're going to finance a project. And if you can reach out and talk to people that have already done it, I think it actually helps to smooth your mindset just about how you're actually going to go and fund these projects. So,
well, that's right, Gavin. So we actually got a very good testimonial on our Facebook page last month, I think it was, and the clients concerned have actually genuinely offered to speak to any prospective borrowers about their experience. So if anyone does want to speak to someone who has benefited, we can certainly take details and pass them on, because we do have very good clients who are prepared to do that.
Yeah,
because of the help that they've had.
It's so important to do your research, and I think if you understand the process well in advance, then it makes you feel a bit more comfortable about the whole thing. And I guess that comes with anything, really. If you can just find out, everyone's a Google expert these days, and I think, irrespective of the information that's on Google, whether it's right or wrong, I think if you can just kind of understand a bit more about how you go about these things, and picking up the phone to you guys, of course, is number one priority. So I've got a fly flying around here. It's Yeah, picking up the phone to you. You're always successful, as you said. So it is really important to feel comfortable with what you're actually doing. So
well, that's right, because I suppose by the time they've come to us, they've already been declined by the mainstream market. So they might be feeling a wee bit dejected. So yeah, it's, as I say, it is good to talk, and if they can speak to someone who's been through the process and benefit from the positives, that's maybe what they want to hear initially. Or, as I say, just contact me direct. And happy to chat to anyone.
In terms of who can apply, we talked about the types of projects. I mean, is there any kind of criteria about who actually can apply for this, who can't apply? Is it an age thing? Is it is there any kind of anything that people need to think about?
No, and there's no straight answer to that one, Gavin, because basically the fund is open to anyone to apply in any part of Scotland. Back to the essential criteria. If they've been declined, we know the reasons why, but they've got the ability to make repayment of a loan in the future, anyone can apply. This possibly takes us more to the reasons why folk will have been declined or refused for varying reasons. I'll maybe touch on a couple of these that might sort of ring true with some people that have tuned in. People who have benefited from gifted land, family gifted land, they haven't paid for it. One major lender, and I know that Hamish Malcolm did touch on this himself, one lender just won't touch it, and that's their criteria. Other self-build lenders who will accept it might want a bigger deposit than they've got over and above the gifted land. That's not a blocker for us. They can apply to us, no problem. Another area that we're seeing more activity in just now is those that are downsizing. Folk get to a stage in life where they think accommodation is too big for us now, we don't need it, we'll downsize. So what they decide to do is stay where they are, build a new house as their dream, and then move straight from the big house to the smaller house and use the equity from the original house. So they don't need a mortgage requirement. So the mortgage lenders will often refuse that because it's a short-term proposition and they want a long-term mortgage commitment, normally 5 years or more. So because of the short-term nature of it, they'll be declined for that. A big area that we're supporting just now, especially in the Western Isles and the west coast of Scotland, is crofters, because crofters can also access the Croft House grant scheme through one of the other government divisions. And some lenders aren't comfortable in the self-build market that they're providing a deposit from the Croft House grant for up to £38,000. Again, that's acceptable to us as part of their deposit, and there are lenders out there that will then remortgage that on completion of the build. I mean, some folk genuinely just want to stay where they are in their current property, watch the new house get built to save the upheaval of having to move into temporary accommodation, storage, and then 12 months down the line, repeat the process. And that might not be acceptable to the mainstream lenders because they'll be looking at affordability of potentially two mortgages. If there's a mortgage on the current property and they want additional funding for a self-build, they might be deemed unaffordable to them. Where the scheme can accommodate that because it is a true bridging fund. It's just back to the checks that we carry out as to how they'll repay and what the repayment strategy is, whether it's equity, a loan from the sale of the existing property, or a combination of equity and a top-up mortgage, or purely a mortgage. So these are all acceptable. There are other scenarios where a current family home might have been specially adapted for specific needs of a family member, and they may be putting these into the new build as well. So it might not be appropriate to go into temporary accommodation that might not fit their needs. So again, that's another reason why the fund can be used for that purpose, to allow folk to stay and keep that family in the home that they're in and do a straight move to the new build, which is suitable for their needs.
And you mentioned crofters there. I mean, in terms of also heritable property, where property being passed down the lines of generations. I mean, is there any restrictions with that at all, or is that just classed again as the whole equity of who owns the land or who owns the property? If that can be attributed to the finance process, I guess that's the same as any other mortgage, is it?
Yeah, as long as what would happen is that there would be a portion of the croft the title would be split effectively to give a house site. Let's call it 0.2 or 0.25 of an acre. So the crofters will be aware of this, that they can apply for a Croft House grant whilst that plot is under crofting tenure. As soon as they've been awarded the grant, they then go about decrofting it, because it's only once the site's been decrofted that they can, the lending in the UK can take place. The site has to be fully decrofted. So yeah, there's absolutely no issue with that at all. You'll often find that tenant crofters can buy a portion of land from the landlord, and as long as they have got ownership of that land and it's decrofted, lending can take place. There might be a ranking agreement created if a landlord sells it on, because they may insist that the crofter or farmer retains that property for a minimum period before they can sell it, or there might be a clawback. So that's just something to be aware of, but nothing that can't be overcome. That's just a legal process that the solicitors get involved in.
So this all sounds great. It all sounds like it's an option for people that perhaps can't get lending through the traditional ways, and it's good to see these kind of initiatives out there, because ultimately it is something that if you want to do a self-build, it's about unblocking all the bits and pieces that may crop up during the process. So it's good that this is another initiative that could help those that are struggling. So, but I'm a pessimist sometimes. No, I'm a pessimist. I'm kind of optimist, pessimist. I'm in the middle. But I always think about risks. What's the risk? This all sounds great. I'm thinking about interest rates. I'm thinking, how much is this going to cost me? What happens if I get into trouble during a build? Just from a high level perspective, what are the risks of this?
I suppose that the risks with any borrowing from the client's point of view is not being able to repay it on time effectively. So, as I say, the two main repayment strategies for repaying the self-build loan fund are raising mortgage finance on the completed build, or selling the existing property and using the equity, or a combination of both. So if something was to change between the start process and the completion of the build, and you struggle to raise the finance, you might miss the deadline for the agreed loan period. Same's true of selling your property. If your property hasn't sold quickly enough and you get to the end of the agreed loan period, the Scottish Government have set what we class as a default interest rate. So during the build process, the rate's set at 5.5%, and it's charged on a daily basis on the funds you draw down. So that's why it's obviously key to use your own funds at the start of the build and only borrow when you need it, because you're going to pay interest on it. If you miss the agreed repayment date, the rate does go up to 9%. So as I say, if you can't raise the finance on time or sell your house on time, that's a risk you run, that you would end up triggering the default interest rate. The other one, of course, is construction risk. Although if you've got your costings nailed down at the outset, you'll mitigate that risk. Because the last thing you want is to vary your build as you go along, which I have seen done, and you start to change the layout a wee bit, and maybe pick some more expensive fittings and finishings, and all of a sudden you're at the end and you think, I need another 50 grand to finish this, or I need 20 grand, and that can be obviously a wee bit of an issue at the other end, especially if you've maxed out the borrowing you can have. I mean, the self-build loan fund is capped at £175,000 per loan. So if someone has applied for that full amount and they've got a shortfall, that will create an issue for them to complete the build. So that in itself becomes a risk, that they've got a house that's not completed, because you can't then move on to get a completion certificate to repay it and get the finance you need on it. So that's why clearly it's important to get your costings very much accurate at the outset and build in that contingency fund. It's always advisable to have 10 to 15% available should you need it. And if you don't, great. I've seen builds where they've come in under budget, so they haven't even had to borrow the full amount of what I class as a facility. I had a conversation with one of my clients last week where he's managed to use just surplus funds himself to buy some of the materials without having to borrow it from the fund. So he's potentially not going to borrow the whole amount, which is great. And I suppose that's where, again, to de-risk the mortgage side of it, it's possibly a good idea to start the mortgage refinancing process ahead of time. So don't wait to get your completion certificate from the local authority. Maybe approach the lender at an early stage and get the ball rolling, so that you've got your ducks lined up effectively. Just wait for that final completion certificate to come in. And at least if there's any issues, they're identified at an earlier stage, and you can maybe go down other avenues for that. Similar to those that are going to sell an existing property to use the equity. If your build's on time, 2 or 3 months ahead of completion, you might want to start engaging with your solicitor and estate agent to try and get that property marketed, because obviously in Scotland you need a home report, and that can take a number of weeks to get that finalised before a property can be put in the market. And by the time you get your property in the market, viewers accept an offer, call it closing date, whatever, you will be several months before you'll actually see the funds in reality. So it's just planning ahead, I think, is the answer.
And I guess you could pay the money back early. I mean, I can imagine some scenarios where that may come into a windfall. Is there any restrictions about how early you can pay the money back? You don't have to incur the interest.
There's no restrictions at all. There's no penalties. The fund can be paid back as early as anyone wants. Indeed, I've seen clients who have actually paid something towards the loan every month, which they didn't have to pay, just to keep it in check or reduce the outstanding balance, because they had surplus income to do that. So no, unlike in a traditional mortgage, you'd hear the phrase early repayment charge, which is a penalty for repaying early within a deal period. There's nothing like that with a fund. And again, when we agree a loan period, we always allow a bit of flex at the end, accepting that, especially those that have got property to sell, that might take a wee bit longer than raising a remortgage, for instance. So we are realistic. So if someone's got a 9-month build programme and they're going to remortgage to a lender, 12 months is possibly sufficient. But if that same person is going to sell a property as well to release the equity, you might want to push that 9 months on to 15 months to build in an extra period, just so they're not going to incur that penalty rate of interest if you don't have to. And it's all about being realistic with it. So there's nothing hard and fast in what we do.
When you look at your clients that you've already processed under the fund, is there a trend? Do most of them not pay anything back during the construction phase, or is it a bit of a mixed bag?
It's a mixed bag, but in general, most don't pay anything back because they've either carrying on paying a mortgage and all their household bills and the house they own, or there are those that are in rented accommodations, they've still got the rent to pay plus all their household bills. So it's repaying the interest maybe isn't an option for them, but that's the flexibility of the fund. Because when we issue loan offers, when they get their illustration out, it confirms, the arrangement fee and such like, but also based on their cash flow projection. Again, it's back to that template we issue. We factor that in to the loan period and how much they have projected they will draw down at the various stages, so we can give them an estimate of the interest that they would accrue. And again, you go back to the default side of things. If someone overruns and it goes on to default, we actually build that in as well. So again, there's no surprises. So if someone goes over by 1, 3, or even 6 months, we actually build that cost in for them too. It's not to scare them. It's just so that, everything's up front, so that, if you stick to your 12 months and you can repay it, that's potentially what's they cost you if your drawdowns are as you've stated. But if there's an overrun for any reason based on those drawdowns, this is the extra cost that you would incur. So, yeah.
Yeah, and you mentioned there a couple of times default just in conversation. If something catastrophic had happened with the project, and this would happen with any traditional mortgage as well, let's say, for example, something, you've got land conditions that were unforeseen that had a huge catastrophic impact on the project. Is there any forgiving terms with regard to the loan fund that would actually allow the self-builder to refinance that? I don't even know if that's possible. If you have something catastrophic happen, you have to, ultimately comes down to financing the project for much longer term on a much higher cost, I assume.
There is provision within the loan agreements that if someone has to extend the loan, they can apply for that. There is the solicitors will charge an additional fee for that, because all these loans are registered with the Registers of Scotland, so they are registered as loans. So any variation would require to be re-registered. But yeah, extending the loan period is an option for them, or potentially there are lenders out there that would take a project over mid-project as long as the certification's in place. So if, for instance, someone needed to borrow more than we could lend because of overruns, as you say, unexpected costs, it may be that they can actually refinance elsewhere at a higher level than we can lend.
Mm-hmm. Have you had any issues like that at all, or has it been relatively?
We've had one. We've had one. To be honest, I mean, the self builds are not always plain sailing. We'll not mention Grand Designs and Kevin MacLeod. His program exists for a reason, obviously. But yeah, no, we've seen one, but only one.
That's good. We've had a question in talking about lending against the plot from Cheryl. Thanks for your question, Cheryl. If you have a loan to help you buy the plot, would this stand against you, I guess, in the application process?
Right, so there's supposed to be two answers to that, and I'll apologise for that, but you'll understand why in a minute. The Scottish Government lend by way of a first charge. So there could be no borrowings against the land itself. However, if that was a personal loan that was taken out and it's not secured against the land, that would be acceptable. The issue then, of course, becomes affordability, because if you've got a personal loan that's been used to buy the land, that becomes a commitment in your financial statement and reduces your available income to service borrowing, I suppose. So the answer is, if it was a personal loan that wasn't secured against the land, yes, but it can't be secured on the land. The land would have to be unencumbered.
So I guess it comes down to affordability overall, doesn't it? Really, I mean, you have to be able to demonstrate that you can honour the commitments. Albeit that gives me an interesting question in terms of affordability, because if in theory you're taking this finance to cover a period of construction and then you're going to remortgage, why does affordability come into it? Or am I being naive in terms of lenders' criteria?
Well, that's lenders' criteria, because the regulation for mortgages changed. You've heard the terms, we'll lend 3 times your joint income or 4.5 plus 1, whatever. But ultimately, the overriding factor now is affordability. So there's set criteria where you take someone's income, and then you've got to go through the expenditure side to see what the net fee funds are. So from that, you're taking all your household bills, be it council tax, gas, electric, phone, shopping, you name it. And critically, you're taking in any finance costs. So if you've got a loan, you have to include your loan repayments as a commitment. Credit cards, you're looking at, lenders will take a certain percentage of an outstanding balance. So they've just got to demonstrate ongoing affordability for a loan, and that is key to any lending now. But I mean, back to the question about the land. Of course, I mean, because we can lend, we can release our first stage payment against the land. If someone has used their deposit to buy the land, it doesn't mean they can't get access to that, because we can lend the first stage against the land anyway. So when you asked the question earlier on, can we lend 100% for construction costs? Yes, subject to cash flow.
Mm.
So yes, as long as they bought the land outright, we can release the funds against that value.
Hopefully that's answered your question, Cheryl. Hamish has come on to us through chat. Just for everyone that doesn't know, actually, Hamish Malcolm got his name right this time. Hamish came on and did a program with us a few weeks ago about the self-build mortgages. Hamish works quite closely with Neil, so I think you're good buddies as well. So Hamish has come in and talked about the interest rate. So if you did have to flip it between, flip lenders midway through, lenders in that space don't have that much competition. So they would be prepared for chunky fees as well. But ultimately, it really does come down to affordability, as you say. But we all hope that we can actually go into this with our eyes open. We have contingencies, because ultimately the best scenario would be where you don't actually have to borrow any money at all. But not an awful lot of us are in that kind of in that space, unless you've got heritable property as well, which is actually another interesting dynamic, because these self-build projects could actually be done by releasing equity from your parents' property, for example, that may be another way of being able to finance self-build projects, but that's maybe a topic for another day. So we've got to that place. I mean, I'm going to ask this, and I know you're going to hate me for asking this, but in terms of timeline, once you've submitted all your paperwork, how long? When can I get the money? When's the money going to be available, and when can I start putting a spade in the ground?
When can you get the money? Well, ultimately, I mean, I'll jump ahead a bit here. Then we have to wait till the Scottish Government solicitor confirms that all the legals are in place, and as soon as we've got that confirmation, we can release the funds direct to the client. It's one of those. I mean, as I said earlier, we've got a two-stage application process. The first one deals with the financials, as you rightly said. It's the information that clients will have passed on to their lender anyway. At the end of the application, there's a checklist, obviously tick box to enclose all the documents. So because we deal with that locally and I review them before I pass it on for a second signature, if that information comes in a winner, be it by post or online, we can turn that around in a matter of days and then send out the stage 2 application with the various pro formas for cash flow and such like. And again, because clients will have done their homework and got their build costs and their supervision up, lined up, the chances are all these documents will be saved somewhere on their own PC, and they'll be able to turn that around fairly quickly. We also issue the loan offers ourselves as well. We do have the government approved documentation, which, as I said earlier, would be signed out by our Chief Executive Officer. So we are self-sufficient to that extent in the office, and as I say, with direct contact, we just keep in touch. I mean, if an application comes in and there's a piece of information missing or we need a wee bit more, I'll often just pick up the phone or ping a quick email back, and just keep the dialogue going. So try not to sit on things. As I say, because clients are coming to us as lender of last resort, they've maybe been disheartened by being rejected by the banks, and this is why we need to make this an absolutely positive experience and just guide them through it. Very much hand-holding where it's needed. So yeah, there's no straight answer to Gavin, I'm sorry, but it's as I say, because we do assess everything ourselves locally, it's down to us to turn it around as quick as we can once all the information's in, and that's what we aim to do.
And so maybe take it from this stance. Once you've been approved, is there a kind of, is that easier to answer? Is it once you've been approved for the fund, is it a 3-week period, or is that relatively set? Well,
once the loan's been approved, as I say, the loan offer goes out to the client. 2 copies of the loan offer goes out with the illustration showing what the costs are, the agreement of principal letter, and instructions for their solicitor. So the client will then basically contact their solicitor to get, obviously legal advice on signing up to what is a secured loan. And as soon as that comes back into us, we then send off loan instructions to the Scottish Government solicitor. And it's at that point the 2 solicitors then liaise with each other to create the standard security, so that the Scottish Government have a first ranking agreement on that land to lend. And it's down to that legal process, which is out with our control locally. It's down to the solicitors to arrange that between them. And as I say, as soon as that's finalised, the government solicitor contacts us, normally by email, so we get it same day, to say the legal's all in place, you can release funds. And then we just liaise direct with the client, and just it's happy days then, electronic funds transfer straight to the bank account. And
as you mentioned earlier on, you might not need all those funds. Is it when the funds have been released to your account as the trust, or is it a case of you pay interest from the time that you draw money from the trust to the essentially the self-build account?
Yeah, I mean, the interest is only charged when we release the funds direct to the client's account. So if someone draws, for argument's sake, £30,000 for the first drawdown, they will pay interest on a daily basis on that £30,000. And then it might be another month or 2 months before they take their next drawdown, and then they'll just pay interest on the total amount they've borrowed.
Okay.
So yeah, it's obviously it's a rising line, I suppose. So it's almost like a low start. As I say, you're only paying interest on what you've borrowed for the time you've borrowed it. So the amount you've applied for becomes effectively your facility to draw against. And as I said earlier, I've got one chap who possibly will not draw his whole amount because he's part funded it as he's gone along as well.
Good. So we are just coming to the end of the programme. We've got, I can't believe we've only got 5 minutes left. We've kind of chatted for, sometimes you go into a webinar and think, actually, well, we managed to do 60 minutes, but I've not been shocked yet. You know, we've always got to the end. We've got one other question that's just sneaked in at the end there from Antoinette Chalmers. Is the fund going to be available long term, or is there a closing date for applications? Good question, Antoinette.
Well, a very good question. Thanks for popping that one in. The current fund was agreed for a 3-year period by the Scottish Government, so applications for the fund are open till the 31st of August next year, with a further 12 months beyond that to make repayment. Now, I think, as I said earlier, we obviously had the pilot fund, which was successful in the Highland area, which allowed the government to launch the national fund. I think we report on a monthly basis and have other meetings in between with the Moor Homes Division of the Scottish Government. And I think we will be able to put a very strong case forward that the fund should continue because of the way it has taken off. As I say, the interest this year in particular has been tremendous, and just the amount that we have now committed for the government. But yeah, the straight answer is applications open for till the 31st of August 2021.
And that's when you make the application. So any funds and any successful applications thereafter, I guess, will be honoured. Is that how it works?
Yeah, as long as the application is done by that deadline, these applications will be taken through as any other application. The only constraint then will be that you've only got to the 31st of August 2022 to have your house built and repay the loan. Right. So you'd look for a fairly quick build on that one. Okay. But yes, no, we'd certainly like to think that the fund will be extended, but that's.
Well, let's use COVID as a. I mean, let's face it. I mean, you mentioned an upsurge on the applications, but actually, it might have held some people back as well. So, fingers crossed. If it's a successful initiative, then there's no reason why it shouldn't be extended, in my opinion.
Absolutely, we'd like to think so too, Gavin. Yes, absolutely.
Right, thanks, Antoinette. Hopefully that answered your question. We're just coming to the end of this. I mean, Neil, thanks very much for your time. I mean, if people want to get in touch with you, how should they get in touch with you? Have you got email, which I assume you need to do?
Yeah, absolutely. I think it was going along the bottom of the screen earlier on. So there we have it up. So, well, obviously our web address at the trust is hscht.co.uk. The inbox for the Self-Build Loan Fund is selfbuild@hscht.co.uk. Or direct dial number to me is 01463 572 030, and calls to that number will also be diverted to my mobile. So, as
always
I say, very, very accessible. More than happy to hear from anyone.
Excellent.
Talk you through your process.
Thanks, Neil. Much appreciate that. It's been very informative. I've really enjoyed this session. And yeah, I'm sure it won't be the last we hear of you. I hear that maybe there is a possibility that we could have a more rounded finance session, maybe with maybe 2 or 3 other experts, and that's maybe something that we can look at in the future. So it's something that if it adds value to people and they learn from these sessions, then why not? So we look forward to that. So yes, thank you very much, Neil. As mentioned, we do broadcast this across all our social media channels, and it will be available. I think it goes on to YouTube like within the next hour and a half. We also upload them to our podcast channels. So if you're on the go, if you're going for a run, if you are in the car, safely, of course, you can also listen to these on the go as well. So you can, I think it's Amazon, Spotify, and all these other kind of high-tech channels. You can watch or listen to our podcast channels. Also, if you're on Facebook, we do actually have a community group. So if you have any questions, if you want to kind of bounce ideas off of any of the other community members, then feel free to join it. It's on the Scottish Self-Build and Renovation Community Group. Join the group. It's all free, and it's a really good, informative way that you can actually ask questions of other people. It's something that we launched a couple of months ago, and it's slowly working for people. They're getting the answers that they're looking for. Our next program is on Sunday, the 6th of September, and we're joined by TL TechSmart. We've got Caroline and Thomas Lawrenson. They'll be talking about hardwired network versus wireless. So one for the techs, I'm looking forward to that one too. I'm a bit of a techie geek, so I'm looking forward to that. But it is actually quite an interesting one. There is the wired network versus the wireless decision process that you have to take, and you have to get that right as well. So that's one to tune into on the 6th of September. Remember to please like, comment, and share our webinars. Subscribe to our channels, both on YouTube and Facebook, so you can be the first to hear of our next webinars. So have a great week, everybody. Again, thank you very much, Neil. Much appreciate you joining us. And
Thank you, Gavin.
We'll hear from you soon. Take care.
Okay, cheers now, bye.